finding your balance, knowing how to navigate through the market, knowing how to make decisions, settling balance psychology is key to whatever you do in the financial markets today. Good evening. Today's date is the 11th of October 2023, and I'm just here to walk through. This will be very brief, you understand? I'm not going to do much because of one or two. I'm just going to walk through what we have seen in the chart already. Are you getting me? So, as you can see, this is gold, and if you watch all my videos, I've been saying that I've been using gold as a lead indicator to trade the rest asset like probably my Euro USD, my GBP USD, my what's it called, AUD and the rest of the market and the rest of them like that. So it's just as simple as the ABC. But let me just run through gold by going to the higher time frame. I know what I do. I know that I have the market in my head already, but to be sane enough to make my own decisions and ask decisions, as in review my decisions I've been making over time. I usually go to the monthly time frame to calibrate my mindset and my brain again. And is there anything I need to do here? Okay, let me just go straight into the chart and show you. I have to get already on gold. So on gold, this is a monthly chart of gold. This is a monthly chart of gold. So as you can see the monthly chart of gold, you can see what is happening there. So as it stands right now, let's just go back to the weekly because we'll have it already in our videos and our analysis going forward, knowing that definitely once we get back to these areas, I guess we'll definitely find, a reversal back to the upside because it's a major support and resistance area, which is an area of value on the weekly for us. So definitely we're looking to come down to those weekly and daily areas of support and resistance. This is what you saw on the weekly, and if you watch our last videos, you see where we did ABC. We talked about go doing an ABC move to the downside after doing this ABCD harmonic pattern. If you can go and look at that. So there are levels in which you must attain before you can be able to trade these financial markets. After this after this ABC move to the what's it called, ABCD harmonic pattern to the upside, back to these major supplies, we are expecting what the market to either do what's it called, a head and shoulders pattern to continue to the upside, are you getting it, or do an ABC what move to the downside to see if we can find demand to continue to 2100. So it was as simple as that since the month of May, June, July, August, September, October. So the market has been, priced in since the month of May 2021 before we reviewed it perfectly well again in the month of August, where we got these our sale all the way from 1980, $1,980 of gold back to $1,800 area, if 1942 area field where I did that emergency video. So there's not much to talk about. And the only thing we have right now, if I can get this off, was happening on the Four-hourly chart. And what was that on the Four-hourly chart? We could see in our previous analysis where gold was able to do what? Switch and change character back to the downside. So it is simple. I can delete my chart and bring them back again. By this, first of all, we did a break of structure and we were able to do a change of character back to the downside, in which we retraced at this particular and we know how to look at our strategy at VisionX. After doing a change of character back to the downside, we reversed just 0.382, which perfectly played well. So this area was having a first rejection, second rejection. So according to market structure and our price action strategy, we look at this as a reversal, point again, because we have it already that it was a reversal. It is when the market is coming back down and we're breaking structure again, then we know we're retracing back to 0.618 or 0.5 Q zone to take another entry again at these zones and take it back to the downside. So we're after breaking structure, it's just review. We came back to our Q zone 0.38 and 0.5, 0.618 Q zone, and we were able to take more entries to take this market back to the downside again from these, areas. If you watch these videos, I don't need to go back to them. I'm just doing a quick rundown. So after doing that, and we're not breaking to the upside, if you can remember, what I do here, I trade market structure. If truly this was going to be a head and shoulders pattern, it would have, just did this fake out and continue going. Watch that video. You would have gotten a reversal sharp pattern, back to the upside. But since that particular place failed, the structure is now same thing that we got here. Are you getting it? Three, what's it called? There's a pattern in which they call it structure. This was 3 touches, and we expected it around this area again. 1, 2, 3 touches. You're getting, so this was a major resistance again after this pivot point, rejection, because this was what a 0.5 retracement level to the downside if you use your Fibonacci. So your Fibonacci is key, your change of character is key. Those are things we use here at VisionX to determine our entire market and where it is going to. So I said this is going to be a quick one, and we looked at, rejection from this area where I told you guys that if gold fails to recover 1942, how and why 1942 to 1950 area is one of the most important structure, one of the most important reason why this market will go back to $1,800 area. On those 2 previous videos we have on August 9th, and I think the previous one, emergency video, they are forgotten their date on YouTube. We uploaded on YouTube. Everything is there. So if we fail 1942, we are coming back down to the downside, meaning that this change of character would prevailed. I get it, mean that this change of character prevailed, that we reverse from 0.5 retracement level, change back to the downside. So if that prevailed, what does that mean? We have our Fibonacci. We did our Fibonacci retracement on the what's it called, on a particular video, maybe 1 hour video, the best video you see on. And what did they say? We said we have 3 take profit. The first one is 1880, the second one is 1850, and the last result of 1813 to area. This was the analysis we did the previous, and we took all these trades, and we even shorted, aggressively down to the downside from 1900 area. So what next is what people are asking right now. What next? If you ask yourself what next, you can't get down the 4 hourly chart. Where can you get that? You have to go back to, the higher time frame to recalibrate your mind again. And what I love doing is I love staying on the weekly and the monthly chart to see what those candles are doing. And the reason why we are reacting is because we're on the weekly, and the weekly right now, what can you see? You are seeing these sharp edges on the weekly. Again, so definitely you are supposed to know that psychologically, not even intuition or what your mind is telling you, what you see. You're supposed to know that we're supposed to get at least a 500 to, I usually say on every, it depends on the higher the time frame, the higher it will bounce. Are you getting it? I usually say that on every Fibonacci, if you're a Fibonacci trader, on every Fibonacci retracement, there must be a bounce on those levels. There must be a bounce on those levels. Just like you bring your Fibonacci tools in and you're just drawing the entire structure that moved. Okay, let's say, how will I put it? Let's say the last structure we had was the last what's it called? The range we had was this range, right? Was this range, because this was a break of structure. So we are trading in between this range. That's what you should look at first. The condition of the market. The condition of the market is what bullish from the downside. Did an ABC move back to the upside here. So doing a minor ABC move to support, and it's finding support, the market has done well, become extremely bullish then, except to break down again, changing character or taking liquidity and recovering it again before we know that. So these are things you usually look out for. So to me, this is a major ABC move to the upside, and this is a minor ABC switch to the downside. So imagine that you have been, waiting all the way from May, all the way to get, October, to get this ABC move. And you held your trade from all the way from probably even $2,000 gold to $1,000. You know how many pips is that? So your mental health, the way you look at the market, where you are trending your market to, your target, we have something called the CST strategy at VisionX. which is the condition of the market, the what's it called, entries we are taking, the stop losses we are using, and the targets. That is why you see that I can just leave my computer for days without even checking back, because I know that I've put a risk to it. I guess, and even though it goes to take that risk, no problem. We'll come back again next time. I guess it will come back again next time. So those are the things that make me sometimes just be sometimes 100% cold towards the market, or heartless, whatever you might call it. I usually do that towards the market. So the last result we had is, can see how sharp it is here. This was the last result we had, the last resistance in the last support we had that we broke. So on the weekly, I'm looking back to come back to this 1,880, 1,008, and what's it called, 900 psychological area. So the market is there. Are you getting it? So if you are taking probably a sell from these areas and putting risk to it, that's not a problem psychologically. You don't need to do a proper analysis before you should take trades. Like all these areas now, I've set sell as in sell side liquidity, or what's it called? I've set what's it called, sell stop what's it called, entries in those places. Put 100 pips to your 150 pips. It goes and take it, no problem. I've been making money in the market ever since. So you just need to calculate your risk to it, calculate your money, your capital, and apply this risk to it. I guess apply all this risk to it. Just need to run through the market and show you guys what is in the market right now. Okay, thank you very much. So this is what I was like, talking about. I just try to, run through. Finger tips already. Sorry for that distraction. But okay. I guess I just wanted to run it free, rough sketch without even really affecting myself. So if I was on a trade from here, take some profits in the middle, I guess, and let the rest run. I guess, so psychologically, you can be emotionally detached from the market as if it's nothing. So I'd rather do this than go and do any other business out there where I know that I can sleep for weeks, months. All I'm waiting for is that hit my target from the regardless of the date or the days the market is in trending. I get me? This is just how I look at the market. Being myself detached, I don't need to be here again. This is my business. Let the market do the work. I am not the one that is doing the work. I'm not the one pushing the candles to move apart. I get it. So if you're ever confused, do what? You drop down to what? The daily, and you can see how the market is what, all those your support and resistance you've drawn. It makes sense to you that you don't forget all these particular areas and values, because these are what you have been using to either trend the market to the downside or to the upside. So these areas are very, very vital for you going forward. Are you getting this? So, and on from the daily, we had this, we had this, we had this, we had this, then we had this resistance, this support, resistance. So we had our lower, what? Our high. I guess in we had our lower low, we had our lower high, we had our lower low again, then we had our lower high. So these are your structures. These are under lower low again. So we have not had under higher high. So these are times where you just need to connect your dots and see how the market is trending before you can make some kind of other harsh or irrational decisions going further. So if truly that you've connected all these and you're seeing how the market is going already, what should you do? You can just decide to put, a rough sketch to it, like, okay, the market has been trending in a descending triangle, or whatever you might call it, or, how the case may be. Okay, I'm coming. I get it. So, or whenever how the case what may be. So you trend all the way from your monthly time frame to your weekly time frame. I getting it, to your daily time frame, to your 4 hourly. Find those special places you can even take, even though it's 100 pips. You're looking for maybe $1,000 today. You know you have a $10,000 account. What can I use to eat? And what can I use to eat? What can I reach to read? What should I do? What should I do? Sorry for the I'm not going to edit this video and upload it like that. I will. I'm not gonna edit. I'm gonna play it like that without all this. I know there have been little one or two distractions before Global Nikes, but it's necessary so that you guys can see that sometimes it's not really about getting you a perfect analysis or trying to. I like bringing a raw, like bringing the market raw to you and how I look it. I get me because I know that I should have a 1,810, $1,815 entry already because of it might not come down to touch our psychological barrier of what I'm ready to do. Just put my risk to it, even though it's 200 pips or 300 pips risk to it. I get it, calculate it along inside my strategy and just watch how the market is going generally for the past maybe 1, 2, 3, 4 days. Look at what is happening. Nobody might be interested in these moves. Are you getting? They just want to see a structure build, and you know how we do it at Vision X. We just want to see how our market is building and switching and changing character back to the upside, looking for entries to continue taking this market. So, how no matter how long it takes, you should always look for all those strategy, the first condition, entry, stops, target, our change of character is very important. Every other thing, detach yourself from the market emotionally. It will help you a lot. Are you getting it? If you don't have enough capital, calculate your capitals, calculate that, okay, just take it as if you're playing betting and you have so amount of money, you divide into 10 places or you divide into 20 places. Let me use this portion and see if it will work out. Let me take the next portion. So I'm here just to speak to your psychological balance in the market so that you will not start opening your chart every minute and things go wrong. Why would you say you don't want to lose money? The first thing I think of every day when I wake up in the morning is how to make losses, be happy with my losses, be able to, accept my losses even before I even press that button of buy or sell. So the moment I do that, I have detached myself away from the market already. Like, okay, I have a $20,000 account. What should I do today? Okay, let me see if I can lose $2,000 today inside the market, and I wait for all these important areas to come into my I guess in existence from all those my videos you see me doing. I guess and just take all those risk to it and put my stop loss above it or above. It depends on wherever I want to put my stop loss according to the structure itself. So to me, gold has been very, very perfect, and I'll be using gold to drive the rest of the market. I guess because everything is clear inside there. Everything is clear. Broken structure. We are supposed to come back to these areas. You take a risk to it and leave it to run since it's not taking a profit. Leave that market. Leave that market to do to run for you already. I guess the market is there to show you whatever it wants to do, what it wants to do. So detach yourself from the market. Focus on your life and your family or whatever you want to do or your business. Let this be what's it called? Extra what's it called? Just mention it, use the right word. Let this be your normal or your extra curricular activities you just do, even though it's making you most of your money. Don't attach yourself to it. So I'm just here to talk about the psychology, the way I look at the market, the way these people don't want you to look at the market, and the way the market has been doing, or the way the market has been trending itself. So I don't do away with all that. I don't do all these horizontals or these vertical trend lines. All I just do is my major support, my major horizontal trend line instead of all these trend lines. Are you getting me? But I just add them to support myself because the market is don't want you to think this way. Like, okay, we might be coming all the way to 1,900 area and finding what's it called a resistance on all this level. So you just have to bring in. It takes you less than 1 hour every day to analyze the market. Catch your psychological balance and just put your risk to it and let the market does what work for you. Are you getting it? So just let the market do what work for you, knowing that definitely we might come back to this previous, support and just find resistance around this area. So I might even take a trade from 1,900 and put 1,920 or 925, 250 pips to what to it. If it comes and take it, no problem. I've been winning more than 10 swings ever since. Again, so losing just this 250 pips, $2,000, $20,000 should not be able to affect me if I have $100,000 account. I guess if I have a $10,000 account, risking $500 to enter this trade, or $500, or maybe even $200, or 250 pips, or 200, 0.1 lot entry, just depending on your capital. Just accept your loss, because you know that definitely if it works, you know you are getting over 1,000 pips back to the downside. I get to see if you can find a double bottom to continue going. So how do you look at your market? Very, 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 very important. Psychologically, psychologically, psychologically. I get it. I get it. So let me end this here, and just, so that you can review and just watch to help your mental health also. I guess your mental health, very, very important. That's what I have for you today. Take care and bye for now. Bye. Bye. Okay, where are we?